difference in what we save, we will give that to the employee to go toward their HSA. We will continue to do that. The amount changes every year based on the price. Option 3, very few people take it. We started offering option 3 when Memorial was not in our plan. By the way, we're Local Plus, and Memorial is in our plan now, has been for 3 or 4 years, but at one point they weren't, so we wanted to give the employee the option to buy up to get Memorial. And then when Memorial came into the plan, we thought everybody would quit buying it, but a few still do because what they're getting with option 3, they have to pay up the difference. You see the difference in 778 and 821. They have to pay that difference. They choose to pay that difference. Remember that. That's a buy up option. I want to buy up and get the different network that's in option 3. And what they gain with that is the Park Ridge group of hospitals, whatever that company's called. Anyway, they're gaining Park Ridge Hospital, East Ridge Hospital, I believe, and the doctors that go with that network. So a few are still doing that. They may not ever go to Park Ridge. They're choosing to buy up so that they could if they wanted to. And then option 4 is a little more complicated. Option 4 says if you will take option 4, we will buy you direct primary care. We will pay your monthly cost of direct primary care. It's a very good option. You need to know that. So if anybody's asking you, explain it to them. But if you're looking on this paper, it doesn't look good because it has high deductibles. But especially if you're young, you take option 4, you get direct primary care membership, which means you can go to the doctor as many times as you want to every month, and it doesn't cost you a dime, no copay. It means if you go to the doctor and you need a prescription, so many thousand are provided at no cost. Almost every prescription is free. But we make you take option 4 if that's what you choose because we want you to also have insurance for, uh, I'll say, catastrophic situations. You have a car wreck and you're badly injured, you got to go to the hospital. That direct primary care doesn't help you. So you do have an insurance policy backing that up that will cover your hospitalization and all of those things. Or if you had a stroke or a heart attack. So you don't want to have just direct primary care. A lot of people will tell you, "Well, I just want direct primary care. I don't care about the insurance." Yes, you do care about the insurance because you may need it, not plan to need it, but you need it. So it's high deductibles, and because of it being high deductibles, we save on the cost of the policy. We still pay for that policy for you, the individual, but we'll also provide you direct primary care. And if you're young, especially, and you don't have that wreck or that unexpected heart attack, that direct primary care takes care of all your needs. But you got to be insured for the worst case scenario, and that's what that is. It's high deductibles, but you're gambling on not needing those deductibles. You're going to need to go to the doctor. You may only go once or twice a year, but once or twice a year, there's no copay. It's free, and you need a you've got a sinus infection, you need an antibiotic, it's free. So you go to that doctor 2 or 3 times a year, it doesn't cost you a dime, but you still have the backup insurance for those emergency, unexpected situations. So please understand all that. It's a complicated option, but it's a very good option for the right person. Having said all that, I don't want to complicate anything anymore, but is there any other questions that anyone would have? Um, if not, the timeline, I won't be here Monday night for the work session, but your chairman will take your recommendation to the commission Monday night, ask it be on the agenda for November the 3rd. Hopefully, it gets approved November the 3rd, and then the open meeting enrollments will occur in November and latter November probably, and then it will take effect January the 1st. There'll be plenty of time for the open enrollments. Question, yes.
Yeah, Mr. Mayor, how many exactly employees do we have? 740? Is that correct?
Uh, I don't know, and for various reasons, some don't take it. Of course,
Okay.
talking about insurance, there may be a lady that is
Okay.
on her husband's insurance, that kind of
I
thing.
got you. I got you.
And
Okay.
and by the way, if you run into that, there's no need to duplicate your insurance because anyway, uh, but that's why the number of employees we have versus the number on the plans. I can get those. I doubt that she has it with her. You want to come up to the microphone?
The total employees is 604. 604. And part of those are at the road department as well, so. and
That's
they-
the other thing. This does affect the road department. Once you've made this recommendation, I will talk to them and they will probably stay with what they're doing also. They always have that, you all gave them that option a few years ago to kind of do it a little differently. Their plan isn't exactly like ours, but they've since then been staying with the same plan. I think they will too. So, I don't even have that one with me, but it's roughly the same thing.
Okay.
So you are voting to do the county as a whole with the understanding that you gave the road department a few years ago the option to do something a little differently. They're still in our plan, but it's a different plan. Does that make sense? Yeah, in case you didn't realize that, it is a little bit different.
Yes, ma'am. Do you know how many family plans, insurance plans you have?
Sam, how many families?
12 families.
Okay.
Now, keep in mind, that's because, and you need to do this too, if you need family coverage to be part of our Cadillac plan, it is costly. So I always encourage people to shop it. And so a lot of people do. 12 didn't for various reasons, but shop it. You can get a less expensive plan on your own somewhere else. Or a lot of people are the wife may work for the county and they go on the husband's plan, that kind of thing. So for various reasons, you hear about the cost of family a lot, and I wish it was less because Adam will tell you in recruiting, they always talk about the cost of family, but out of 600 and something people, only 12 people are taking it, and that's because a lot of them are shopping at other places or they're on their spouse's plan and vice versa. So that's kind of misleading. If we offered free family, for example, I'm sure that number would be a lot bigger.
Thank you.
Any other questions, really? If I don't have all the answers, but we have Pam, the broker here, but we also have Sam back there is the Cigna guy that I have to fuss and fight with. So at this point in time in history, we don't like each other, but we'll start liking each other again tomorrow, maybe. But yeah, he's the Cigna rep.
Mr. Hughes.
The only question I have is, I know the family plan has came up. It was a few years back, we added the family plus one, or I believe that's the way we've got, is family plus one.
Right.
Has that, how many of those are on that plan?
There's-
Because I know that we just opened that up a few years back.
Plus
8 and 4. We added that option in there for 4 people. And what you don't realize is adding that option caused the rate to be a little higher. But from time to time, we've done things to help out the vocal few, and it costs overall. But 4 people are taking that option that was such a big deal that particular year. But anyway, 4 people are doing the plus one, and 8 people are doing the true family.
We did look at optional plans with, going with higher deductibles and things like that, changing the benefit rates, to lower them so that we could, the mayor could calculate what it would cost to, be able to pay for more of the family cost. And it's really impossible to know how many employees would take advantage of that. So you can't really budget it because you just don't know. You can take, do a little bit of guesswork, but it's a challenge.
And something I wanted to mention too, you didn't ask about, but I did mention on the cost of the family, there's 2 ways to lower that cost, and that's by lowering the benefits. And if you look at option 4, family is a lot cheaper. That's why we came up with option 4 that year, that not too many people are taking, but that is the cheapest family plan. And it's, like I said, it's a good option, but they don't take it because they see it on paper as being a less good option because of the higher deductibles. The other thing to remember, you get compared, we compare to the city every year, and they're Blue Cross, we're Cigna, so no matter what anybody tells you, no 2 companies are exactly alike. But in the plan to plan, there are a few lines that's better with the city, but there's one big difference. And this is something we could do if we wanted to lower benefits, which I'm not recommending doing. But for example, the the deductible for the city is $2,500. Our deductible is $500. So when somebody throws the city up at you, I don't hesitate to say, wait a minute, you want to sit down and look at it? 2,500 versus 5. Now, there are some other lines that favors them a little bit, so it's not a apples to apples when you're hearing that. But their family is cheaper, partly because of 2,500 to 500, partly because the city pays a lot of the family coverage. The city government does. So until we're until we lower the benefits or are willing to pay some of that cost of family coverage, that's why ours is what it is.
I could tell you some good news. I got a report that we update each year to show what your rate increases have been year after year. So for the last 16 years, we have a record showing. And so the average over those years has only been 2%, just a little bit over 2% increase, which is phenomenal. So I thought I'd mention, what? No? Oh, no? Okay. Was there did you calculate something different? Okay. Anyway, I just thought I'd mention that because, that's just the average over the years. Now, there's been some tiny tweaks occasionally, but not many because, as you can see, the benefits are still very rich and your deductible is still very low. So,
I don't use that percentage too much because it's always too high. But from a budgeting perspective, it's an average of that. Now, some years it's more than that, some years it's less than that, but that's what we've averaged, increasing the cost to the taxpayers over the years. And again, we could tweak it, lower the benefits, and save some money. But I've been there and done that, and it's tough when you have to start explaining that you've lowered the benefits. That's the only reason I'm not proposing it, because it's tough to explain. It puts you guys in a bad situation, me too.
Mayor, tell me again, the amount for individual, how much does that cost to individual or what the county's paying?
The new price for an individual that we pay is $778.22
A month, so, okay,
times 12,
yeah, I see that.
9,000 something.
And when you pay that 778, when you do the family plan, the 778 comes off of that?
Right.
Okay, all
In
right,
other words, that's your total cost, but we've paid 778 of it for you.
an
Yes.
individual,
And
okay,
that's where the city will pay more than the 778 for
Yes.
your family coverage. They're paying quite a bit of that. But anyway. And then if you look at the option 3, that one's more, but that's the buy-up plan that I'm telling you. And that's where the employee that chooses to do that, they're paying the difference. They're paying 20, 22, they're paying this next year they'll be paying $43 a month because they choose to have that other plan that includes Park Ridge and East Ridge. And then again, you will look at option 2. There's a little bit of savings. We're not saving it. We're giving it to them toward their HSA. And in option 4, the savings is going to pay for the direct primary care. That's not shown here because this just shows you the insurance. But it says up there local plus direct primary care. So we're taking that savings and paying their direct primary care.
Mr. Hughes.
Mayor, just for clarification, on these family prices that it's showing, is this after that deduction of that 778?
No.
Or is that,
That's the cost. You got to subtract it off.
okay, so
So
it'll be
in
subtracted off from
Option
that
1,
amount.
it would be 1,200 roughly.
Okay, that was a clarification for me. I
But
just
if you
wasn't for sure.
But don't forget about option 4. You can go over there and it would be 800,
Mhm.
700. They complain about the cost of family, but they don't take option 4.
Anybody else have anything? Go ahead, Mr. Blake.
no, we're working. looking second after vote. Well, it's just the number that's
It all, it all goes back to the claims history, Mylan, which those arguments were several weeks ago, but they come to me the first, when they do the 19% increase, they show you the claims history. And the claims are more than the premium. That makes sense? And then we look at why. And there's approximately 3 or 4 employees that have huge, huge claims. That changes every year, of course, but they base it pretty much, I'm not speaking for Sam, but they base it pretty much on the claims history for this past year. And our claims went above and beyond the premiums. Is that accurate, Sam? You can come to the mic if you want to say more than that.
Well, the easy answer to that is that applies across all plans everywhere is if you just Googled what is medical trend for 2026, it'd be probably 7%. So that justifies 7%. And then if you look at an individual's group's claims and the pool that you're in because it's insured, then you have to factor that in. And I think Pam mentioned the average premium increase over 16 years has been 2.6%. The average medical claims increase over that time has been 8%. So premiums have grown, claims have grown faster than premiums. So it's pretty simple math after that. But just medical trend, everyone should expect an average across the country medical trend. Probably about 7%. That may be low. We can look it up.
If
Help?
if you watch Fox News much, Mylan, last night it was on the news, and I would only say this after we have something here we're looking at approving. I wouldn't say it during my argument with Sam, but it was on the news last night that for some reason, I don't know what brought it up on the news, but it said the national average for family insurance this past year increased 6%. And the average cost, and I don't like averages because you're including places like Los Angeles and New York, but the average cost nationwide for family insurance was $2,600 or $2,700. A lot more than ours, and the increase is a little bit more than ours. But more important than that is we have those years with a lot of claims. I remember years back I had several commissioners with open heart surgery. Don't tell me that don't affect your renewal if you have several. But we have 3 or 4 really big claims people this year, and hopefully we won't have next year. I won't have to argue the claims with Sam. But whenever those claims are like they are this year, I don't have a lot to stand on other than going back and lowering the benefits.
2% average over the life, I guess, whatever is one thing. But the amount of money that we pay in premiums in the budget, I mean, if you say 2% times $100, you know, I get it. But we're not saying 2% over, this is millions of dollars in our budget. 5%, we had it the other day, the general fund and the roads and fire. I think it was 3.8, I can't remember. Anyway, it's millions. So 5% of millions, not hundreds of dollars. So I just need all my commissioners to know, when you start talking percentages, translate over to real dollars. Because we got tough decisions, and I respect the mayor on that, and he'll agree with it. I mean, this is getting to be a bigger and bigger expense in our budget. And I get the claims argument. That's the insurance business. You know, sometimes you win insurance, sometimes you don't. I get it, but don't just go by these percentages, because the real number is how much we have to budget. So, 5% with the exact same thing, hopefully we start getting healthier and then the claims go down and we can next year go down. But we cannot just keep going at these kind of increases. I just tell you, without us on the commission making tough calls. Mayor, you may
Yeah.
agree or not on that.
Yeah, I hadn't gone there yet, but down the road, we're probably gonna be forced with either some major changes or some major tweaks, one or the other. I was almost there this time, I can tell you that. But, and what he's talking about on the percentages, so be thinking about it, because if I'm here next year and you're here next year, we're gonna be looking at some changes probably. It's getting, but the 2% is every year, so in, 2%, and then next year, if it's 2%, it's on top of the 2% last year, so, it keeps snowballing, you might say. But I think I'm reading this right, the premium in 2010 was 3,600,000, and today it's 5,300,000. So that's what's getting out of whack. I don't know which they would choose if you put it up for an election, but you could do some major changes, save some major money, and throw it at salaries. But the odds are their benefits went down somewhat, maybe not effectively, but went down at least to get that better rate. But even without doing that, we're going to be forced to do some things in the near future. Now, there's, not to get too complicated, but Obamacare did one good thing. It said an insurance company can't make but so much money on your premium. I don't remember what that number was. But a couple of years, our claims were down and they were in the black, but you're only allowed to be in the black so much, and we actually got a rebate. I think looking at this chart, we've gotten a rebate 3 or 4 times. But when your claims are bigger than the premium, you don't get that rebate. But that rebate did help out 3 or 4 times there. That's the only good thing I know about Obamacare. But it basically, he would word it differently, but it basically said insurance companies, if you make more than this percent, you got to give a rebate. And we got that rebate several times, and it got applied toward what we paid for insurance. But this year, that wasn't the case because of the claims being more than the premium. Any other questions or comments, anyone? Insurance is very complicated. It's very complicated to explain to employees, and usually they don't want to hear, but it's a very complicated thing to deal with. And these guys drive me crazy during most of the year, but especially in the last couple of months. We take it seriously, but you've heard me say this before. I could be like other entities, go on the state plan and never bid it. And there's some entities that you know of right here in Bradley County that never bid it. They're on the state plan. Now, we've been on the state plan before. State plans, in my opinion, benefits aren't near as good. And here's how it works. Come January, I think they're on budget year, but whenever the time is, when it comes time to renew, they send you a letter and they say, here's the tweaks. In other words, here's the benefits we lowered. And oh, by the way, your increase is 8%. And you have no say-so. You have nobody to argue with. But life would be so much simpler for me. I'm on the state plan. My predecessor never bid insurance. It was state plan all those years. Another big entity in county government never bids insurance. They get a letter telling them how much it's going up and what the benefits are changing. Now, there's an insurance committee that gets to negotiate that, but that insurance committee is wherever in Nashville. I don't get to negotiate it. I've been on it 2 or 3 times. The last time I said I'd never go back on it, but I wish I hadn't have said that because my life would be a lot simpler to be able to say, no, we're on state plan. We don't have to bid it. I would rather fuss and fight with the private sector and get a better plan and a better price, but it is very aggravating to do. I can tell you that. I've told them several times I'm going to go back on state plan and forget this crap. But it's not the best for the employee. It's really not the best in the long run for the county. And when you go off of the state plan, there's criteria, you can't go back on for 2 years. When you go on it, I think you have to sign up to stay on it for 2 years. I mean, it's not good, but it's what most people do, government-wise. They're on the state plan, and that's why you never hear about insurance. When we bid it almost every year. Like I said, last year we didn't bid it. At 1% increase, it wasn't worth the effort. But most every year, and you're told this, why don't you ever bid it? We bid it almost every year, and I just went through the timeline of this year's bidding. We do that almost every year. Spend a lot of time on insurance. Not as much time as the total budget in the spring, but second to that is insurance. Having said that, I'll shut up unless you all have a question or comment. Appreciate it.
Anybody have any questions, anybody? I do have one question, Mayor. City individuals, they pay nothing, right? They pay their premium and everything for them on the city also, correct?
Right. Plus, the family's a lot less. See, that's the big difference. Unless we're willing to pay roughly 50% of the family cost, we'll never match them on that particular subject. That's why they're so low on family.
That 5.3 million would go up even more so.
And it's hard to budget and guess how much because you don't know how many families will accept it, but it would go up tremendously, yeah.
Just comparing apples to oranges. Do you know how many employees the city has that they're covering?
400 versus 600.
Okay, thank you. Anybody else have any questions? Anybody? Do we need to do anything else, Mayor?
No, that's fine with me. I appreciate your recommendation. And like I said, get it on the agenda Monday. I won't be here, but if anything else comes up, holler at me anytime. And hopefully you will get it finalized then on November the 3rd so we can get the open enrollment schedule.
Any other business at all? Nothing else? Communication from the audience. Anybody want to say anything? Go right ahead, ma'am.
I would just like to say thank you for the opportunity to continue to work with you on your health insurance benefits, all of your employee benefits. And it's a pleasure working with your employees and their dependents and that are insured. And it is a lot of work. I know that the mayor is sick of seeing my spreadsheets and going back and forth, but it is a lot of work. And he spends a lot of time. He's very diligent about the decisions that he makes. And I just wanted to tell you thank you for giving me that opportunity. And I know that Cigna is thankful for your business as well. Please don't ever hesitate to call me if you've got questions. Bobby called me about 2 hours ago and needed something for him personally on his. So we're always happy to help everybody. So call my cell. That's the best way to catch me.
Anybody else? Okay. Lori, is there anything that you have? We got everything good. We got our motions for our work session. Okay. All right. Need a motion to adjourn. We are adjourned.